Hi friends, welcome to Toronto Real Estate Street Talk with Riyaz Rauf. This is another episode that we would be concentrating more on the predictions or my take on 2023. Again, we are no great experts. We don't have a crystal ball. However, we do our business, we conduct our business on certain assumptions, and we have to take educated and calculated chances of what directions our experience says the market would move. So my take for 2023 would be as follows, and you're more than welcome to give me a call and agree or disagree with me and have a dialogue, and we can empower each other with different knowledge that you bring to table. My first primary take on 2023 is going to be 2023 is going to be a year like no other in terms of opportunities for investors. Investors are thirst for blood, thirst for investments, and they are going to jump into the real estate market probably late in the first quarter and the early second quarter. So I would say from around March onwards, the investors will be hugely active in the market. The end users will become active in the market probably only in the third and fourth quarter when they see a real huge difference in the market, because investors will feel this difference much before what the real first time home buyers would be looking at. I'll explain further. That's because the investors will be looking at month on month appreciation and the momentum that the economy and the housing market builds up in terms of average price. On the other hand, the end users who are new buyers will always go by year over year appreciation in average price. When you look at the year over year appreciation in the average price in January, February, March and April and even in May, we are going to see huge declines. I in fact term that a statistical bloodbath in Toronto, and this will discourage new buyers coming into the market thinking each other month is going to be a better month. Little do they realize that the month on month appreciation is going to be greater, and gradually there is a momentum that's been built up, maybe 0.5% every month or whatever. So in short, investors will look at month on month, end users will look at year on year. However, by the time we end the year, for example, we ended 2022 with a price of average price of 189,850, which was 8.6% appreciation than 2021. However, we most likely would end 2023 with an average price of 1,120,000, which would be about 6 to 8% less than what we are for 2022. So in other words, I am expecting a average price decline of anything between 6 to 8%, definitely less than 10%, but it's going to be 6 to 8% minus in terms of average price growth for Toronto and TREB. On the other hand, when it comes to volumes, I am thinking that the volumes would still stay the same, because we would have a decline in the first 2 to 3 months. But however, when it comes to the third and fourth quarter, we are going to build up momentum, but that may not be enough to catch up of what we have lost already in the first 2 quarters. So our volumes may stay around 75. So the third prediction that I'm going to do is when it comes to inflation, I think by the end of the year, our inflation would be around 4% or 4.5%, not in the 6% range, but bringing the inflation as per the Bank of Canada's policy to 2% may not happen at all in 2023. That could be a long-term vision for 2023, 24, 25 because things are different, because we had done a lot of quantum financing through money printing, so that will take its own effect also. On the other hand, we also feel that a recession is unavoidable. A recession will come in, and the recession would last. It could be an artificially induced recession for about 8 to 18 months. The reason I am saying why it's an artificially induced recession is because the whole idea of the economic division of the government, or the people who are looking after the interest of the economy of the country, is not to send the country into hyperinflation. So they have to control the hyperinflation. That's why all these interest rate policies have been introduced, and they have a lagging of 9 to 12 months. So what happened 9 months ago is taking effect only now, and what's happening now will take another 1 year's time to have a lag. And definitely we are going to get the inflation under control. And also there's a lot of good that has happened. See, one of the reasons is supply chain disruptions that we had. We had China being closed until few weeks ago, and now China opened up. 20% of the world economy and supply comes from China. For example, my son bought a vehicle recently from Range Rover, and he got only one key. The spare key is coming only in another 5 months' time, where there's a scarcity of chips in the world market. So such is the situation, which is leading to inflation, and we would be going in for a mild recession because our economy is so strong. Say for example, we are trying to control and create a little more unemployment and reduce the economy firing up, but the economy is refusing. Our GDP is staying the same without moving negative. And also last month we increased our employment by net 104,000 in 1 month. That's a huge gain in employment. So when we look at all these, we are not going in for a major recession, but it could be a mild recession between 8 to 18 months. And in my opinion, although it is not the economic definition of having 2 negative quarters to have a recession, I think we are experienced all symptoms of recession for the last 6 months. And I think if I'm looking at 8-month period, 6 months of that is already gone, and I'm looking at probably another 12 months is my take. And it's going to be an awesome year for investors to buy properties, and they're going to buy in large numbers towards the end of the first quarter and the second quarter, and we'll end up the year with minus 6 to 8% price compared to the previous year, and our volume most likely is going to be stable at 75,000. End users will come into the market in the third and the fourth quarter once they gain confidence, and starting in the third and fourth quarter we will say month over month gains also being positive, and it will not show that negative noise levels in the market. So having told all this, these are my predictions. I would also like to explain what I basically mean by a statistical bloodbath. Now, when you look at the figures here, we are looking at, if you look at January itself, the actual figures for January last year was 1,242,000 was the average price of a house. Maybe this year I'm predicting the average price would be 1,055,000, which is $4,000 more than December's price. So if that is to happen, still we'll have a negative 187,000 in price. When you divide, it's a year-over-year drop of 15%. So this is what Toronto will be talking about. Let's look at the second month, February. The highest peaking of prices last year, 1,334,000, and we may finish at 1,060,000 as average price for this year. So when that happens in February, in March first week, we'll have a lot of noise in the media basically saying prices drop 274,000. That is the highest drop ever in Toronto. So when that happens, we'll see a 21% minus price drop, and this is factually true, but it's a statistical bloodbath, and it is not how we should be interpreting. What we should be interpreting is From December 1,051,000, we are appreciating to 1,055,000, which is a $5,000 appreciation month over month. And from January to February, we'll have a $5,000, and February to March, we'll have $20,000 appreciation. So this is going to show a monthly, month over month is going to reflect as positive. It could be small, it could be plus 4%, 0.4%, 0.47%, 1.8%, 1%. But this is now you see the momentum building up in the positive direction, because we are looking at month over month, and that would continue. However, if we were to stick to year over year, we are going to have negatives in January, February, March, April, May, June, and only around July, in the second and the third quarter, we'll say month over month. That's because we had an awesome first half last year, quarter 1 and quarter 2, and we had a disastrous quarter 3 and 4 this year. So when you look at the best months to the worst month and the worst month to the best month, the figures are going to be distorted. However, at the end of the year, this year we ended with an average of 1,189,850, and next year, or this year, 2023, I expect it to be 1,120,000, which is a decline of 70,000. In other words, the market average price in the market would decline by 6%. That's my take. But if you're an investor, you are not looking at that. You are looking at an average appreciation month over month of 1%. So in other words, if I'm an investor, I have confidence in buying in January or February a property, which I know month over month will have an appreciation of at least around 1%, which if you hold it for 10 months, you're going to have about 10% appreciation. So this is my take on this year, and wish you guys all the very best, whether it is selling, buying, or investing, or even leasing. Speak to us, 647-283-1966. You can speak to me or my son. As always, we would like to part with the word that it's always good to accumulate wealth. It's always good to accumulate real estate wealth. Generational wealth building happens with real estate. Always think of buying and not discourage from selling. If you have to sell, there are a lot of people who want to sell. Let's try to work out a plan how we can sell, how we can hold on the property at least till June, at least till this March. I don't suggest or recommend anybody to sell during this period, because there will be a lot of negative news in the market. Whatever the logic is will not be heard. It's a bad news that gets into the people. Let's try to sell after July. That's the time where you're going to get the maximum value for your house. In other words, if you're in a buying spree, this is the time to buy. Ideally the first and the second quarter. So I would always encourage you to buy and hold and not sell. So give us a call. As always, Riyaz Rauf, a household name. Thank you for investing your time with us. It's extremely important to understand that I am giving my opinions here as a realtor and an investor, serving myself, my family, and my friends. It's also important to understand, while talking about real estate, obviously we will be talking about legal side, finances, and taxes. However, I am not an expert on those, and I urge you to seek expert advice when it comes to those three matters.